Good evening. Ira Epstein of Linn and Associates with your metal market wrap-up for this Monday, the 17th of May, 2021 at 6:30 p.m. Central Time. Well, the metal markets had a great day today. You know, the markets have been quiet. I don't know if you've recognized that since, late in the day Friday, they started getting that way, and it carried through today quite a bit. Your copper's still up strong, 470s, no problem there. Remember, I was predicting 475 fairly fast, and we're knocking on that door. The silver has successfully breached $28. The gold market is pushing the 1870 level. 2,000 on the horizon? Probably. It wouldn't surprise me in any manner. Can I prove it? No, but I've got that feeling about it because we're getting the inflation talk, we're getting the other areas, the dollar is weaker, Bitcoin getting hit. Very interesting times. So if we could, before we get into this, let's go to the chart action and take a look at that together. If you take a look at the 18-week moving average of closes, we successfully got over this recently, and the market has stayed over it. You're not even coming back to challenge it. So you just spun away from that, and you're up for the week so far, nearly, 1.6%. When you look at the June gold, and now remember, I wasn't here for you on Friday, I was for my subscribers, but I played hooky with YouTube over the weekend, not for my subscribers. They had their full weekend views, trade recommendations, everything else. But as you can see, we're fighting a battle here on Friday, and today the market launched out of there with a successful run, catching, I think, a group of stops in the way as well. When we look at the pattern was a correction pattern that then took off, but it's not a pattern of higher lows, higher highs. It's more of a thrust to the upside that's not trending, defined by higher lows, higher highs. Certainly it's making those higher highs, and you can see how nicely it's doing. When we look at moving averages, we had a bullish crossover. So the crossover occurred, let's come right here. This was Friday's action. You had the crossover, 1798.90 to 98.50. That puts into play, if the market's going to go up from here, the closest of a Bollinger Band or a 200-day moving average of closes. Market goes up, we see that today it hit the 200-day, and the Bollinger Band was also hit. If I come back to it and go back to Friday, you can see right here, this is the Friday close, that number would have been 1850. So another $12, $13 higher was the 200-day, and the market has successfully hit both of those, and it's trying to stay to the right-hand side. Still very bullish action. Will we embed? That's the next key. Embedding simply means that the slow stochastic gets into a position where both parts of it, called a K line in red, the D line, are going sideways over 80 for several days or more. You cannot count today because we don't know how Tuesday is going to end up. So Monday, both numbers were over 80. On Friday, both numbers were over 80. Both were not over 80, though, on Thursday. The key is tomorrow. The trip up could be a Tuesday reversal. So you're always aware of it. Got to wait for that to develop. If it does, I can tell you that I will probably initiate a fairly aggressive pattern to try to get into the markets. When we look at the slow stochastics, to me that is the key because it's the missing element. Since you don't have higher lows, higher highs, that's the element that can take over. The gold-silver ratio, if you'll notice, keeps fighting at hitting the 18-day moving average of closes and backs away. Eventually I'll have to move away from June gold and May silver, and I'll do that very shortly. In July silver, and that's what I'm now monitoring, you're too overbought to be a buyer. Market's broken out, as I said, to the upside. Sometimes you can't catch the patterns. That's the way it's working. Copper, the same thing. We've worked off an overbought condition, never did get to that 18-week average, and you might not. Does it owe it? Well, in one of my techniques, it does owe it. That doesn't mean it has to get there, but we'll see. To say that it's not going to be hit again, you got to go back up through these highs. That doesn't mean eventually it doesn't get hit, but that leg of it wouldn't be hitting it. In the platinum market, we have a pattern, as you can clearly see, of a lower low, a higher high. We keep playing around this 18-day average of closes, momentum trying to point up, and stuck within the Bollinger Bands. Not bearish, but certainly not screaming, buy me, buy me, buy me. With the palladium acting the way it is, it won't take much to get a buy signal. As I see it, the pros will, I think, look at the highs of Friday. And if you get over that, they could argue if you get over that number, you could have higher lows and higher highs as long as you don't come back on down through this after you cross the 29, 26.50 area. If that occurs, target probably close to that upper Bollinger Band. There's no other major moving averages over the market. The dollar's getting into oversold territory, but once you got that bearish crossover right here where the 18 went under the 100, it's been Katie bar the door. Will you make a new low? That's what many traders are going to look at. And in Ethereum, you're back down to the 18-day average. Now, when you lose an embedded reading, this is what I was just speaking about, you often try to make a run for that number. I don't know if it's going to do it in some of the metal markets or not, but it's a target number that I get, and I'm not looking to be a hero here, trying to play the opposite of the market, but that's what it's done. As you know, Bitcoin got smashed. Bitcoin's now down about $22,000 per contract from its recent highs. You talk about volatility. Woof. Now, by the way, Bitcoin today, I didn't even look at the end of the day volume. By 11 o'clock it wasn't even that. It had to be about 9 something this morning. There was only 20,000 contracts traded in it. So the market's pretty happy with what's going on with the volume there. I'm happy with the market action. Not every day is a good trade day, and not every day has a lot of setups. Actually, things got quiet about middle of last week. They backed off. I think the grain markets were painful as they've washed out in the corn market and the soybean market. The metal markets have been, as you can see, moving to the upside, not necessarily in a trend method that's classic to it, and that makes life a bit difficult. That happens from times to times. But I cover the weekly charts on Saturdays and Sundays for my clients. Buy signals, sell signals, just weeklies. Daily charts, Monday through Friday. If I don't catch you on YouTube, it doesn't mean I've missed them. It would take something to get me to not be able to put that out, which would require an illness or a planned couple of days off or a vacation. Could be any of that, but I do take time for myself, and it is getting to be summer. But what about starting the day off with ideas? Bouncing your own ideas off of me and my charts, see what they're offering, take it from there. A little more than a cup of coffee? Yeah, but you get 24 days of it. Yeah, 24 business days of videos, each one 15 to 25 minutes long. You're not getting that for $7.95 at another site. I know that. You know that. Give it a try, okay? I'm Ira Epstein. I'll see you tomorrow.